Hello everyone. So today we'll discuss about one of the option strategy which can generate payouts, daily payouts, 90 to 90% of the time. So we'll discuss like what is the strategy, what are the best tickets to be used, and how to use the strategy. Right? We'll discuss everything in detail. If you have any questions, you can post the questions in the chat window, and, uh, and then I'll answer all the questions at the end. So basically, this strategy is called as a daily payout strategy, where right? Even though we have 90% success, please remember that don't trade more than 5% of your investment, right? If you have a, let us say you have a $30,000, you can invest up to 1,000 to $1,500. If you have a 100K, you can invest up to $3,000 like that. Don't invest all because market is driven by news, suddenly any news or something. So that we never know when that news can come. So we can, even though we can make 8 or 9 out of 10 trades profits, there is always risk. So never invest more than 5% of your investment. So yeah, right, nearly with all the back testing tools, we have over 90%, 90.7% success with this strategy. We mainly use ticker called SPX. The major advantage of this strategy is even though you have a small account, you have account less than 25K, even though you have a 5K account, you can use this strategy, and you don't need to uh, track the charts, or you don't need to be available throughout the day, right? Once you take the trade in the first half an hour, first 45 minutes, then you can just let the trade expire. You don't need to do anything. That is the major advantage. So right, one of the major problems for many traders is because they are already full time into their IT jobs or other things, they cannot exit on time. Sometimes the trades make profits, but because they are in some meetings or something, they will be missing booking the option trades on time. Whereas with this strategy, you don't need to even watch the charts. Once you enter the trade, you can just let the trade expire. That is the major advantage of this strategy. And you can, so whether irrespective of whether SPX moves up or down, we can, or if it stays flat, we can make profits with this strategy. So as I mentioned, the major advantage of this SPX daily payout strategy is one is high success rate, right? 8 to 9 out of 10 times we can make profits. Then the risk is limited, right? Because you already have a hedge, right? It is not like where you are trading naked calls or naked puts. So the risk is limited here, irrespective of market direction. We can make profits. And also low hold time, right? Because you are opening in the morning, by end of the day, you'll make the profits. You make the daily payouts. And then easy execution. Just you enter the trade, you don't even need to close the trade. That is the major advantage with this strategy. And affordable. You don't need to invest, even though you have a small account with $1,000 also, you can execute these trades. That is the major advantage with this particular strategy. So if somebody is completely new to spreads, I want to quickly explain what are spreads. Right, until this, anyone has any questions? Right, so this is basically about SPX strategy, daily payout strategy, where we open a trade in the first 1 hour, and you can let the trade expire. You don't need to do anything for the rest of the day. So basically, right, most of you know about naked calls or naked puts, where whenever you think something will go up, we buy calls. Whenever you feel like it will go down, we do puts. Right? Basically, they are contracts, call contracts or put contracts. based on the direction. But 70% of the time, when you do a naked call or naked put, most of the traders lose money because of huge volatility in the market. Market goes up, goes down. Unless you enter and exit on time, there is a major risk by doing naked calls or naked puts. Right? Unless you are a complete full-time trader, experienced trader, unless you are completely focused on trading, you cannot make consistent profits with naked calls or naked puts. Right? If you are a full-time trader, if you are focused, experienced, then yeah, naked calls and naked puts will help you because you have to enter and exit on time. Whereas with spreads, the even you don't need to be a full-time trader, or you don't need to keep watching the charts. You don't need to exit on time. That is the major advantage. Within spreads also, you have two types of spreads. One are called credit spreads, one are called debit spreads. Debit spreads are similar to naked calls or naked puts. Only difference is with debit spreads, you are reducing your investment. Right? Generally, with naked call or naked put, you are buying a contract by paying certain amount. Right? Only difference is here you are buying and also you are selling. Right? Let us say Tesla is at $300. You see that there is a resistance at 310. Then what you do is, if it is a naked call, you will just buy a 300 call by paying some $5 premium. With a debit spread, what you do is you buy 300 call and also you sell 310 call. So your investment, instead of paying $5 for the call, you may pay only $3. But still you are a buyer, right? Whereas with credit spreads, what we do is you are mainly a seller. Instead of buying the contracts, you are selling the contracts. So whenever you buy, right, whenever you are a buyer, the direction, right, your direction should be the instrument should move in the same direction and also with a high momentum or with a high speed. So if you buy a contract, suddenly it stays choppy, you can lose, right? Suddenly it goes down, you can lose when you are a buyer. But as a seller, if you are selling something, if it stays choppy, you will make money, or if it goes in your direction, you will make money. Sometimes even if it goes in other side also, you can make money, right? But it should not go too much in the other side. You little bit, if it goes in the other side, you can still make money. That means you have high probability to make success, to make profits as a seller in the market rather than a buyer. Right? So if you are buying a naked call or buying a naked put or buying a debit spread, you have one out of three possibilities to make money. That means only if it moves in that anticipated direction, then only you will make money. But if it market stays choppy or if it goes up, down, right? Most of these days you can see that market opens, it goes suddenly huge up. At the end of the day, again, it is coming back to the open level. So if you are not a full-time trader or if you are not fully focused trader, you went into a meeting. You might have made 50% profit, but by the time you come out of the meeting, already it went up and again it came down. So that is the disadvantage because there is a lot of news in the market with the tariffs or with the Iran-Israel war, US involving in the war. There is too much of volatility in the market, right? News is driving the market since last 2 to 3 months. So in this type of environment, if you do naked calls or naked puts or debit spreads, it is little bit risky. But if you are more into the spreads, right, credit spreads, vertical spreads, you have more chances to make money. You have high probability to make money. So that's where we generally use credit spreads in this type of market. Once market settles down, if there is a proper direction in the market, either upside or downside with proper volumes, then yeah, definitely debit spreads, naked calls, naked puts are good. But in this type of market where volatility is huge, where news is driving the market, then it is better you focus on the credit spreads where you have higher possibility for success. So what do you mean by credit spreads? Generally, right, as you know, right, for example, just take an example of an insurance company. So we are paying some, let us say, some $200 as a insurance for our car. So that means we are buying, right? We are buying a insurance contract so that if something happens to the car, the insurance company will pay the premium, right? Pay that if something, if I get into some accident, then the insurance company will replace whatever damages happens to the car, or even if it gets totaled, also they will replace it. So insurance company is like a seller; they are selling the policy, and we are buying the policy, whether it is auto insurance, whether it is health insurance, life insurance, whatever is the insurance. Just like in the same way in market also, instead of, so whom do you think makes more money right in a bulk, in a quantity, right? When you see from a higher, right? So out of 100 people who are buying the auto insurance, how many people might be impacted on average per month, right? Maybe one or two might get into accidents. Other 98 people may not get into any accidents. That means insurance companies collecting premiums from all these 100 people. Even if one people or two members out of those 100 are getting into accident, insurance company is paying those two members. Still, they got money from other 98%. So overall, insurance company will be at an advantage, right? When it is a done at a bulk, right? Because they have millions of subscribers. Out of millions of subscribers, 98% of subscribers are paying them and they are not using, right? At the end of the month, if nothing happens to us, then basically we paid that money. So we have zero value at the end of the month. In the same way, in trading also, if you are a buyer, only if direction moves in your anticipation, then only you make money. But otherwise, so you will lose all your premiums with the high, with the theta decay, implied volatility, all these factors. So with the credit spreads, you are acting like an insurance company. With debit spreads or with naked calls, naked puts, you are like a buyer of the insurance policy. With the credit spreads, you are like insurance company who is selling the policy. So whenever you see a stock or SPX or SPY or right, what whichever, whenever you see something is bearish, we do something called as call credit spreads. Whenever you see a stock is bullish, we do something called as put credit spreads. Right? I hope everyone got the difference between debit spreads and credit spreads. Right? Naked calls, naked puts, debit spreads are like you are a buyer of the policy, buyer of the insurance policy. Whereas credit spreads, you are like an insurance company. You are selling the policy to others, and if either it goes in the direction you anticipated or if it stays choppy, in both the ways you will make money. Sometimes even though it goes little bit opposite side also, you can make money. Only if it goes so much against your anticipated direction, that is where you have a risk. But otherwise, most of the times you can make money with the credit spreads. That is the advantage. So anyone has any questions with credit spreads? Yeah, I'll explain what are the disadvantages with credit spread also. But on a high level, right? Again, when you look at the quantity, so debit spreads also, your direction should be right. Credit spreads, your direction need not be right. Whether SPX goes choppy or it stays positive, it goes up or it goes down, you can make money. In most of the scenarios, you have high chance of success. Right? If you are a, I'll explain when to use debit spreads, when to use credit spreads. But on a high level, Trade spreads has much more higher success rate. If your naked calls, naked puts make money 60% of the time. Your debit spreads make 70% of the time. Your credit spreads will make money 90% of the time. So if you are a trader who want to build slowly your account, your portfolio with a low risk, trade spreads are the best one. If you are little more moderate risk trader, debit spreads. If you are high risk trader, naked calls, naked puts. So because of the current market situation, if market is in one trend, right, completely going in one way, then that is where your naked calls or debit spreads are good. If market is going up, down, right, in the morning it is going up, in the afternoon it is coming down. So unless you are completely focused, unless you are completely experienced, for new traders or moderate traders, credit spreads are best in this time. So again, within credit spreads, you have two types of credit spreads. One is bullish, right? If you think something will go up, we do something called as bull puts or put credit spreads, right? Within vertical spreads, these credit spreads, you have debit spreads. But we mainly focus for this strategy, we mainly focus on something called as credit spreads because your risk is minimal. And you don't need to, right? The major risk why most of the traders fail in making money with options is they cannot exit on time, right? Sometimes because they are busy, sometimes because of the greed. Even though you make profits, you feel like, oh, it may go little more up, little more up, suddenly there will be a big candle, you lose all the profits, right? Whereas with the credit spreads you don't have the risk because you don't need to keep tracking or you don't need to close the trade on time, right? With debit spreads, naked calls, naked puts, sometimes they make money, you are busy in a meeting or something, you miss closing the trade in profit. Second thing, even though it made 20%, 30%, 40%, sometimes we think like, oh, it may go little more up, little more up, suddenly there will be a reversal because of some news or because it touched the resistance, it touches a order block or so that is the major risk with the debit spreads or naked calls, naked puts. Whereas with credit spreads, you don't have that risk because you don't even need to close the trade. So I hope everyone got what are bull put spreads. If you are bullish, we do something called as a bull put spread. If you are bearish, we do something called as a bear call spread. I'll explain how to do it using one of the brokerage. But on a high level, you understand what is a bull put and bear call. So why this selling spreads, right? Why instead of buying a spread, right? Why instead of doing a debit spread? Why as a selling as an insurance company, if you are selling the spreads? Because most of the time, 70% of the traders, by doing naked calls or naked puts, they lose money, right? Because they are directional and because if market stays choppy or if it goes right. So going in your side is only one third of the right. There can be three scenarios in the market. One is going up. Second is it will stay choppy. Choppy means it is in a sideways. Third one is it will go down. If you are a buyer of a contract, only if it goes up, that too it should go up quickly. If it takes a lot of time and goes up because of the theta decay, because this zero DTE trades will have high theta decay, high theta. That means every minute, every 15 minutes, 30 minutes, it delays to go up, you will be losing your money, right? You might buy a call in the morning, but for 1 2 hours, it was just moving up and down, up and down, up and down. In the last half an hour, it moved up. But by that time, because of the theta decay, you already lost all your most of your premium. So even though it may move up, but if it takes a lot of time to go up, also you will lose. Or it stayed choppy complete day. Choppy means just it was going one candle, it was going up for 5 minutes, going up, 5 minutes going down, 5 minutes going up, going down, you'll lose. Or if it drops, you will immediately lose. So unless it moves up quickly, if you are buying a call, unless it moves up quickly, you have more chances to lose. In the same way, if you are buying a put, naked put, and if it doesn't drop quickly, there is a high possibility to lose. If you are doing a debit spread is also similar to naked call or naked put. Only thing is instead of Just to buying a call, you are buying a call and also you are selling a call. You are buying a put, you are also selling a put. So your investment is less, but still you have high risk unless the direction goes in your favor. So it whereas with the credit spreads, as long if it stays choppy also you can make money, or if it goes in your direction you will make money. If it goes in the other side also, little bit other side, right? Not completely in the reversal, but little bit other side you will make money. That is a major advantage. So that's why the time, right, theta time decay or theta decay and implied volatility will be at your advantage, right? When you are a seller of a contract, you are selling the option contracts instead of buying the con. If you are buying a contract, your theta decay or time and implied volatility will be against to you, right? That means they are not helping you. Only if it drops quickly, you are at advantage. But if it is taking a lot of time to go up and down, that is acting against to you. That means they are your enemies. If you are a buyer, if you are a seller of a contract, and the theta decay will be at your advantage. Imply if it is going up and down, that will be at your advantage. And it doesn't need to move in one direction. Even if it stays choppy, also you can make money. That is the major advantage as a seller, as with the credit spreads. Again, for this strategy, all you need is any brokerage firm like Robinhood or Tasty Traders or IBKR or Swab or TradeStation, any brokerage. And generally, it is better you need to have level 3 access for spreads, and also you don't need a margin account, but if you have margin account, that is much better. So what are the major benefits of trading SPX? So there is a new ticker in the market called XSP. So why we use this credit spread strategy for mainly for SPX and XSP? Because you can use this strategy with any ticker, like, right, you can use with Microsoft, Meta, Nvidia, Tesla, whatever tickers. But the only problem with other tickers is sometimes there can be assignment of the stocks, right? Suddenly you trade something, you trade a credit spread, then there is a possibility of assignment of the stocks with all the other tickers. But with mainly tickers like SPX, XSP, NDX, there is no assignment of stocks, right? There is no concept of assignment of stocks. It is purely cash settled, right? What do you mean by assignment of stocks? For example, you do some meta trade spread, and suddenly if it goes up or goes down, the brokerage can assign you the stocks. That means your entire account will be blocked unless you close the trade, unless you sell the stocks. Whereas with SPX, XSP, or NDX, there is no assignment, or there is no such risk of assignment of stocks. It is completely cash settled. That means at the end of the day, whether it goes down, up, or whatever it is, immediately the trade gets closed, your cash gets settled. There is no concept of assignment of stock. That's why this strategy is mainly useful for SPX, XSP, and also you can use for NDX. But the only problem with NDX is the spread will be little wide, right? With SPX is the most liquid ticker. That means you are the spread difference, the bid and ask. That means whatever commissions you are collecting, right? There will be a buyer, there will be a seller. So buyer will say, I'll give you $200. Seller will say, I'll sell you only for $220 or $210. The difference between the bid and ask is very, very less. That means your fills can be much faster, much quicker, without much difference. There is always demand for traders throughout the globe for SPX. For NDX, the bid and ask will be little far away. That means buyer may say, I will buy only at 150. Seller will say, I'll only sell at $300. If you do market orders, that means there is a lot of difference between the demand and supply. So that's where it is a little bit risky with NDX, but the same strategy you can also apply to NDX. But you have to only understand that if you get a good fill, this strategy can be applied for NDX also. Otherwise, you can focus mainly on SPX and XSP. What is this XSP? XSP is nothing but 1/10 of SPX. Right? Again, we can use the same strategy for SPY, QQQ. But again, the problem with SPY and QQQ is the same thing. There is a assignment of stocks, right? Suddenly, if you don't close the trades, right, with SPY, QQQ, Meta, Nvidia, with SPX and XSP, you don't even need to close the trade, right? Even though you have a account less than 25K, this won't count as a day trade because once you open the trade, you don't even need to close the trade. If you're not closing the trade, that won't count as a day trade. But with SPY QQQ, you have to close the trade. If you don't close the trade, suddenly they can assign the stocks at the end of the day. With SPX, XSP, and DX, you don't even need to close the trade. Right? With SPY, QQQ, Meta, Nvidia, all these stocks, also we can use the strategy. But the only problem with those stocks is assignment of stocks. You can use the strategy for NDX. There is no assignment of stocks, but the only problem is the bid and ask are little bit far. So the best two tickers which you can use are SPX and XSP. So SPX is basically just like SPY, but it is more expensive compared to SPY. XSP, right? If you have a small account with $100, $500, $1,000, XSP is the best ticker you can use. If you have a bigger account, right, anything about 10,000, 15,000, 30,000, then SPX is the best ticker. So I hope you're getting it, right? So the two best tickers or the top two tickers which you can use for this daily income strategy is SPX and XSP. The next best one is NDX. The next best one is RUT, which is Russell Index. Then after all those things, then QQQ, SPY, those ones. After all those QQQ, SPY, the next ones are you can use Meta, Nvidia, Apple, all the other ones. But why this SPX and XSP? They are the best ones because one is they are completely cash settled. There is no assignment of stocks. These are not stocks. These are ETFs, and there is no risk of assignment. Second thing is the the bid and ask is very small. The difference between bid and ask, right? The spread. That means there is a lot of demand for buyers and right. If you want to sell, there is always a buyer ready to buy at that price or close to that price. If you want to buy, there is always a seller ready to sell you close to that price. So that is the major advantage with SPX and XSP. We use this daily payout strategy using SPX and XSP. One major advantage is SPX is 1/10 of the. So if you have a small account, you don't want to take big risk, you want to start slow, then you can start with XSP. Once you gain confidence, you can go with SPX. Because with XSP, your risk and reward is 1/10. If you make $150 for one contract with SPX, you make $15 with XSP. And they are completely cash settled. And also you have potential tax advantage, right? Whatever benefits you make with SPX or XSP, you have 60% of those benefits are taxed at long term. Only 40% is taxed at short term. Whereas with all the other tickers like Meta, Nvidia, whatever benefits you make for the day trading, they will be counted as 100% short term gains. Okay? They won't be counted as capital gains. Whereas with SPX, you have a bigger tax advantage. And then there are some brokerages like IBKR, Thinkorswim, where you can also do 24-hour trading with SPX and XSP. And then these are the best tickers for spreads, right? Spreads are iron condors. These are the major tickers. So that's why generally best to focus on SPX and XSP. If you're a small account trader, XSP. If you're a big account trader, SPX for this strategy. Once you gain confidence, then you can extend it to NDX, RUT, and other things. But yeah, first the major, the best two tickers are XSP and SPX. So how to use this strategy and right how we are making 90% success with this strategy. Generally, every day between in the first 1 hour, right, 8:30 to 9:30, first 10 to 15 minutes, it is better we avoid the trading. There will be a lot of volatility. But between 8:45 to 9:30, every day we'll right this SPX or XSP, they will be either overbought or oversold. So if there is a lot of big move during Europe time frame, that means Asia market, Europe market, if ES, NQ or SPY, QQQ are going up, generally in the first half an hour, we'll see something called as a swing sell. That means it is overbought. If there is a lot of big up move during Asia and Europe, when market opens within first 15 minutes to 30 minutes, we'll see something called as a swing sell, right? If you see something S, that is called as a swing sell. Then if you see SELL, that is called as a scalping sell. Whenever market opens and you see a swing sell in the first half an hour, what we need to do is we have to do, that means it is bearish, right? Because in the Europe market or Asia market, Asia means basically your Australia, Japan, China, India, all these markets. Europe, right? Your UK, all the European countries. If generally it goes up in that time frame, in the first half an hour, we see either price will be at a swing, right? At a very high position or at a bottom. So generally, we have an indicator called futures level manager, which will, or stocks level manager. They give you, right, for ES, our futures level manager will give a swing sell and scalping sell. In the same way for stocks level manager, SPX and DX, they will give a swing sell and scalping sell. So if you see a swing sell and scalping sell in the first half an hour, then we need to just do a bear call spread, right? What do you mean by bear call? That means we are bearish that SPX will drop because already during Asia and Europe it went up, and then it is at a strong sell zone. That means there are a lot of sellers who want to book the profits and want to bring SPX down or XSP down. That means whenever we see a swing sell and a scalping sell, we can go little bit above that, right? That means that is a very strong resistance. 95% of the time, price will stay below that zone that complete day. Generally, in the first half an hour, you will see a swing sell or a swing buy. Whenever we get a swing sell, we have to go little bit above, right? For example, at 60.20, we got a swing sell on Friday. Immediately, we went and we did 60.25 and 60.30 bear call spread. That means we are selling 60.25 and as a protection, we are buying 60.30. Right, we got a swing sell at around 60.20. So we will go little bit above and we'll do a bear call spread if we get a swing sell. That means what we are doing is we are selling a policy or we are selling a contract, telling that buyer, whoever is buying, right? Somebody who thought like, oh, market is going up, there is a huge gap up. Most of the retail traders think like it will go further up because it moved so much high, right? Because they see that, oh, market is going up, they will buy and market makers will bring it all the way down. So whenever we see this swing sell, immediately that means it is at a strong sell zone. If it is at 60.20, we'll go little bit above and we do 60.25 and 60.30 bear call spread. That means as long as SPX stays below that 60.25, all the money you collected for that policy is 100% yours. So for XSP, just you have to divide by 10. If we are doing 60-20, 60-25, 60-30, you do 602, 603, right? Divide those numbers by 10, then you will do XSP. You do a sell 602 call and buy 603 call. Then if price stays below that, then all that money is yours. So 95% of the time, the SPX or XSP will stay below that zone on all the days. In the same way, right? If you see a swing buy, right? You instead of swing sell, you see a swing buy with a capital B and you see a scalping buy. Then price will stay above that area for the complete day. So you don't even need to look at the charts, right? Once you take this trade, you can just hold the trade for the entire day as long as it stays below that area, that 100% of the time you can keep all that premium. So we collected 130 $140 on Friday. Then all that money is 100% yours. If price stays, so even though it may stay choppy, it may go down, it may go a little bit up, still you will make money, right? Because you are doing something like 60-25, 60-30. It was at 60-20. Even if it goes to 60-25 also, you will make money. If it goes below 60-20, you will make money. If it stays choppy throughout the day, you will make money. That is the advantage with the credit spread, irrespective of the direction, whether market goes up, goes down, whatever it happens, 90% of the time you will make money using this strategy. So if you see a swing sell and a scalping sell, just will go little bit above that range and you take a trade and you don't even need to close the trade. The entire day price will stay below that region. In the same way, if you see a swing buy and scalping buy, entire day price will stay above that zone. So you have to go little bit below and you have to do a bull put spread. If it is at the top, if you get a swing sell and scalping sell, you have to do a bear call spread. If you get a swing buy in the first half an hour or first half, so all you need to do is make a trade between 8:45 to 9:15. In that time frame, you watch out. Either you will get a swing buy and a swing sell and scalping sell, or swing buy and scalping buy. Every day, generally, you will see that opportunity. That's it. You don't need to do anything else. So, what is the risk, right? So, only risk is when there is any major event, right? For example, you have a CPA or PPA event at or FOMC event at 1 p.m. on that day. On those days, better you avoid the trade, right? If there is any major event during the day, suddenly if FOMC reports that they are cutting down the rates, then there is a chance that it may go and break that resistance. But if there is no major event on the day, then price will stay within this region. So whatever you see here at the top, that is the strong sell zone. Whatever you see at the bottom, that is a strong buy zone. So that means that is the range where the ticker will move throughout the day. It may go up, come down, go little bit up, come down, but it will be somewhere in between these two zones. Only if there is a major event, FOMC or any major CPA or PPI or any major right news events on the day, on those days, it is better we avoid the trade. Or once you take the trade, immediately you have to be ready to close the trade when it hits 30-40% gains. But if there is no major event, you don't even need to close the trade. So whenever we see that swing sell and scalping sell, we have to do a bear call spread. Whenever you see a swing buy and scalping buy, we have to do a bull put spread. That's it. All we need to do is that. So what is the risk? Suddenly if there is a good news or something. You took a swing sell and scalping sell. Right? For example, that is a 5 point difference, right? We did a 6025, 6030 bear call spread. If SPX stays above 6030, you already collected around $150 by selling the spread. That means your risk is $350 for each contract. Right? The difference is 5 points. That means $500 is risk for every contract. And if it goes up above that range, because you already collected 150, so your risk is 350. So 1 out of 10 times or 2 out of 10 times, we may have such type of scenario where suddenly there is a event or suddenly Trump announces some good news, suddenly market may go up. But 8 out of 10 times it will stay below that range. or 9 out of 10 times, right? Based on the historical and right in last 3 to 4 months, whenever we take a trade in the first half an hour, 90% of the time we were right. So if you just focus on that one trade every day, you can. So if you are investing $1,000, right, thousand means you are, let us say, the difference is 5 points, and you are collecting $150. That means you can do three contracts. If you have a 30,000 account, you can do three SPX contracts. So you can make around $300 to $400 at the end of the day, and maximum risk is $1,000. So 8 to 9 out of times you can make profits. One time, if there is a major news event, that is where major news or major any positive news or something, that is where we have a risk. Otherwise, just every day, whenever you see a swing sell and scalping sell, we do a bear call spread, and whenever we do a swing buy and scalping buy, we can do a bull put spread. That means you go a little bit below and you do a bull put spread and collect the premiums. So all we need to do is wait for that first alert in the day and take the trade, and you don't even need to close the trade. So it won't count as a day trade. End of the day, you will collect the premiums. So if you use, right, with SPX, your investment right is approximately $300 to $400, but with XSP your investment is less than $100 for one contract for each trade. And generally, how many days we can expect these trades? On average, three, right, out of 5 days, 3 to 4 days, right? Unless there is some major event on the day, we won't take the trade. Otherwise, 3 to 4 days every week, you will see these trades. And because we are not even closing the trade, right? You don't even need to close the trade, so it won't even count as a day trade. So even though you have a small account less than 25K, you can do these trades. And generally, right, if you have just a level one, you won't be able to take the trades. That's why you need to call the customer support and you need to tell them that you need level three permissions, right? If you tell them you know how to take spreads, you have experience in trading spreads, then they will give you the level three. So better with IBK or TST or anything, you have to call them and tell them that you have experience, then they will give you the level three permissions. So the same strategy can be used for leaps also, but right, instead of watching on 5 minute time frame, if we use daily time frame, and again in the daily time frame, you see something at the top, you are at a sell at the top or you are at a buy at the bottom in a daily time frame, then you can use the same strategy where you can hold the trade for a month or two, and you can make nice profits with the bear calls and bull puts. You can nearly keep 90% of the profits. But yeah, for now, we'll mainly focus on the day trading or mainly on the daily payouts, where in the first half an hour, 45 minutes, we wait for a swing buy and scalping buy, or you wait for a swing sell and scalping sell. Whenever you get a swing sell and scalping sell, do a bear call spread. Whenever if you get a swing buy and scalping buy, you do a bull put spread. So there can be, right, after the first 1 hour, you may get swing scale or swing sell or swing buy. But if you get this signal within the first 1 hour, that is the major, that is the best opportunity. Right? For example, on Friday we got a swing buy, scalping buy after 12:30 or 1 o'clock, and then it went up. But you have little more risk involved because generally in the first 1 to 2 hours there will be a lot of volume because US market is open, Europe market is still open. There will be a lot of volume. If there is a sell zone, that means all the US traders are trying to bring it down, all the Europe traders are trying to bring it down. There will be a big move in the first 1 to 2 hours. So your risk is very minimal if you get a swing sell and scalping sell in the first half an hour or first 1 hour, right? Between 8:30 a.m. to 9:30 a.m. Central. If you see a swing sell and scalping sell, or if you see a swing buy and scalping buy, they are the best opportunities. If you get a swing sell at around 1 p.m. or 1:30 p.m., the volume is already right, will be very less. After 10:30, 11 a.m. Central, the volume will go down. Until 2 p.m., last half an hour, last 45 minutes, the volume will be very less. That means you will not see a big drop. It can be little choppy. Your risk is little more. So that's why for the daily payout strategy, we always look for a alert. So if you want a low risk trade where you can make 90% of the time, where you can make profits, we look for a swing sell and scalping sell in the first 1 hour, or you watch for a swing buy and scalping buy in the first 1 hour. That is where not only you can make money with options, at the same time you can trade futures. You can trade in the prop accounts. If you get a swing sell and scalping sell in the first 1 hour, that is the best opportunity where you can short ES or NQ, right? Because ES and Q, they move in the same direction. So at the same time, you can make money with the options in your personal accounts. You can also short futures in your personal accounts. You can also short futures in your prop firms, prop accounts. That means without investing your own money, you can take the trades and you can short it. And until your T5 is red, you can hold the trade. Until you see a T5 turning to green, you can hold the trade. So with one trade, you will easily make $1,500. Or if you see a swing buy and scalping buy, you take a long position and you hold until your T5 turns to green. So at the same time, you can make money with one is with options. You don't even need to watch the trade. You don't even need to wait for the trade to close. But for futures, right, with the prop firms, at the same time, you can take a short or you can take a long based on swing buy or swing sell. And you can make one with just all you need is one trade every day. Within first 1 hour, if you get a swing sell and scalping sell, you take a short. Within first 1 hour, if you get a swing buy and scalping buy, you take a long on your prop firms. All you need because in the rest of the time you have a lot of choppiness in the market because of low volume. Because the first 2 hours is where your Europe market is open, US market is open. There will be a lot of huge momentum in one direction. Either there will be a big drop or there will be a big bounce. Generally, if Asia and Europe market is down, we will get a swing buy and scalping buy. If Europe and Asia is generally going up, then generally in the first 1 hour we will get a scalping sell and swing sell. So at the same time, one is you can make money with SPX, you can make money with XSP, and also you can take futures. You can trade NQES at the same time. NQES, YM, they all move in the same direction. You can take short with NQ, short with ES, short with YM. You can make nice profits with the prop firms. So all we need to do is just that 1 hour you take the trade. And one more thing is you can even trade futures options with futures. You can also do ES shorts with right? You can do a bear call with ES. You can do a bear call with NQ. You can do a bear call with YM because they're also right. You are going little bit above. If ES is at around 6,000, you can do 6,005, 6,010 bear call spread. So all you are watching is one, right? One signal within the first half an hour, right? From 8:45 to 9:15, 9:30. Generally, 3 to 4 out of 5 days of the week, we'll either get a swing buy, scalping buy, or swing sell and scalping sell within the first half an hour. So once you get it, you make money with SPX and XSP. You can make money with futures, ES and QYM. You can make money with options on the futures. So because all of them move in the same direction, and you don't need to worry about closing the option trades. Right? Futures, once you make some nice profit, once your T5 becomes green, you can close the trade. That's it. So if you follow that one single strategy, your risk is minimal. You are not trading when it is choppy, when there is low volume. Because whenever the volume is low, suddenly a small change can suddenly take market up and down. But when there is a proper momentum, proper lot of volume, when there is a lot of, right, because Europe, US, everything is open, that is the best time, right, between 9 to 11 central is where there is huge across the 24 hours of the day. 9 to 11 is where there is huge volume with SPX, XSP, ES, NQ, YM, all these tickers. That is where we are waiting for a proper signal. If you either you get a swing sell or swing buy. Where if you get a swing sell, do bear calls. If you get a swing buy, do bull puts. Then you don't even need to close the option trade. You can take short with NQ, ES, YM in your prop accounts. At the same time, you can make money in different prop firms. You can take trade with futures accounts. You can make money with your individual futures accounts. You can trade options with futures. You can make money with them. So all we need to do is just wait for that one signal, either a swing sell along with scalping sell or a swing buy along with scalping buy. So if we just follow that strategy, we can make, right, 8 to 9 out of 10 times we can make money. So again, right, generally if ES is dropping or SPX is dropping, most of the time your Meta, your Nvidia, Amazon, Google, they will also drop. But only thing is, if you're an active trader, you can go and you can watch them. Only thing is, for them, you have to close the trades manually. Whereas for SPX and XSP, you don't even need to close the trade because there is no risk of stock assignment. Whereas Meta and other stocks, if you don't close the trade, suddenly end of the day, the brokerage can assign the stocks to you. So that's why if you are an active trader, you can do all these different tickers. But if you are more of a passive trader, you don't want high risk. You cannot track the charts throughout the day. You cannot watch for buy signals or sell signals. Then all you do is watch for SPX and XSP. These are the two best tickers. You just focus on those two tickers. So let me show you. So, right. So this is what I was trying to explain here. So this is our swing sell and scalping sell. So this is your strong sell zone and this is your strong buy zone. So here we got a buy, swing buy and scalping buy. So yeah, we did the bull put spreads here. We made some profit, but the risk is little more high when you get a signal after first 1 hour. So, so here this is the swing buy. So this is the strong buy zone. This is the swing sell. So generally every day within first half an hour to 45 minutes, either you will get this combination or you will see this combination. Whenever you see this combination, the first half an hour to 45 minutes, just you can go below and you do a bull put spread. Right? For example, you got a buy here 59.50. You can do 59.50, 59.45 or 59.45, 59.40. Then the price will stay above that zone. You got a sell here. Then we did 60, 20, 60, 25. Then price will stay below that the complete day. So all we are trying to do is, so price will generally stay between these two zones. This is the strong buy zone. This is the strong sell zone. Whenever you get a swing sell, bear call. Whenever you get a swing buy, you do a bull put. In the same way, whenever you get a swing sell, you can do options on futures, right? You can go to ES, right? Whenever you get a swing sell, you can go above this and you can sell 60, 60, 60, 60, right? So on Friday we did 60, 60, 65. So price stayed below that, that all premiums collected is 100% yours. Or if you get a bull put, you go below, you can do options on futures. Then price will stay above that. Or you can just short futures in the personal account, or you can short futures on your prop accounts. So this is the best signal every day between that 8:30 to 9:30. You wait for a swing sell and scalping sell or swing buy and scalping buy. So if ES, generally ES, NDX, SPY, QQQ, XSP, all these they move in the same direction. Right? You got a swing sell, you got a scalping sell. At the end of the day, you got a swing buy around 1 o'clock. So here also you have 70% of making money, but here this is very, very low risk trade because that is where there will be a big volume, huge volume, and there will be a big drop or big bounce. So this, if you want to low risk and you want to generate some daily cash flow, you take a trade and you don't even need to look at the charts again throughout the day. 8 to 9 out of 10 times will make profits with a minimal risk. Right? All you are spending is 10 to 15 minutes of the time to enter a trade. So like that. So as I said, generally when your SPX is dropping, your major stocks also will drop. So Meta, there was a huge drop. Amazon, there was a huge drop. Apple also, there was a huge drop. But only thing is for these ones, you have a problem with stock assignment. So only if you can close the trade, you can take these ones. Otherwise, just you focus on SPX, then you can focus on NDX. NDX, the spread will be little more wide, but with SPX, the spreads will be very, very close. So, right, they will be very narrow. That means you will get a better fills. You will get better premiums. You can collect better premiums with SPX. So if you follow this one strategy, one is you can make consistent profits with options, right? And also, if you are a stocks buyer, you can use something called SQQ and TQQ. If SPX is dropping, SQQ will go up, right? Here you got a swing buy, scalping buy. This went all the way up, right? If you are a stocks buyer, if SPX is dropping, SQQ will go up. You can buy the stocks. Or if SPX is going up, you can buy TQQ if you get a swing buy. So, right, if you are not an options trader, you don't want to take risk, then you can use the indicators for SQQ and TQQ. You can make gains with them. So if SPX is dropping, TQQ will also drop. So SPX and TQQ, QQQ, they are in the same directly proportional to each other. They will move in the same direction, whereas SQQ is the inverse ETF. So, right, all you are doing is watching just one chart, SPX or ES. If you are watching SPX chart, you can make money with SPX, you can make money with XSP, you can make money with NDX, you can make money with RUT, you can make money with SPY, you can make money with QQQ. You can make money with ES, you can make money with NQ. Then all you need to do is open SPX chart or ES chart and wait for a swing sell or swing buy in the first 1 hour. If you get that, then you can trade futures on prop firms, you can trade futures in personal accounts, you can trade options in your personal accounts. So all we are doing is wait for that swing sell or swing buy in the first 1 hour. If you wait for that one, that is good enough. Every day you can create some few $100 with a minimal risk without watching the charts throughout the day. All you do is just enter the trade and you can let it expire. You don't even need to close the trade. So yeah, today again we may see a big gap down with NQ and ES. There might be little more drop. So if it drops too much today, tomorrow we may have a bull puts again, SPX bull puts, because mostly today evening we will see a big drop because of the Iran and Israel war. Tomorrow we may see some bull put opportunities, but uh, yeah, you will see. Um, you- so you will see many opportunities like this, right? This is Friday. SPX 6025 6030 bear call and collect 132 135 daily income trade. QQQ sell 531 call, buy 533 call and collect $100 for today daily income trade. Then from morning 8:50, right? Because we got that swing sell. Then there was a huge drop, 60 70 point drop on SPX. QQQ dropped 6 to 7 points. So so SPX QQQ continues to drop and we can keep 100% of the premiums on the bear calls. When I give SPX, you can also enter SPY, NDX, QQQ, XSP spreads in the same direction. So like this, every day we'll have one or two opportunity, right? Minimum one opportunity. So here you can see NQ. Right? At the same time, we got yeah, we did the ES ES trades. We collected 100% with ES trades. So all we need to do is wait for the direction, wait for the trade, and you don't even need to track it. Yeah, so let me. And because generally market open and market close, that is where your market makers will do a lot of transactions. Right? Generally first 2 hours when market open. So this is the time where US market opens and US market it is going to be closed. So that is where you will have a lot of volume. Right? Because again there will be a lot of trades to be closed. That's why generally in the last, right, most of the big companies do selling, right? They do credit spreads, they do sell the contracts. So that's where last 1 hour also you will have volume. First 2 hours will have volume. In between it will be always choppy. So that is where first 2 hours if you focus, or you don't even need to wait for a complete first 2 hours. Because within for 8:30 to 9:30, we'll see a swing sell or swing buy. Whenever you see a swing sell, if we also get a scalping sell, that is a 100% confirmation. Or whenever you get a swing buy, if you also get a scalping buy, that is a 100% confirmation. Then we can enter the bear calls or bull puts. When you do that, then yeah, we'll will completely make the profits. So like that, every day we'll have a trade like that. So same thing, for example, in daily, right? For example, you have huge resistance here in daily. So if it goes there, then there can be a huge drop. Then you can open a lead for 1 month or 2 months expiry bear calls. Then there will be a huge drop on SPX and NDX. So if you want to hold for more than a day, and then you will use the daily time frame. So here it came to the daily time frame, there was a huge drop. Right? It touched the swing buy, and again it went all the way up. Now again, if it goes to this around 6,120, 6,130 area, then you can open leaps. You can sell all these bear calls after 1 month expiry, 2 months expiry. Then there will be a huge drop. Again, it can come all the way to 5760. Or today also, we may see a drop here. Right? Price always goes to the bottom, goes to the top, comes down, goes to the top. Again, we have a sell. So today we may see, right, tomorrow morning we may see SPX going further down. But yeah, well, again, daily is mainly for leaps, not for day. Right? For day trading, we always use 5 minutes time frame. Whereas if you want to trade swing trades, then we'll go with daily time frame. Use the same concept, but you will use daily time frame if you want to hold the trade for a week or two. Right? If it goes to this area, then you can open August August month expiry bear calls. So this is the swing sell. This is the swing buy. You can also open in the personal accounts and you can hold it for long time when you get it in the daily time frame. But for your right everyday payouts, we use 5 minutes. In 5 minutes, in the first 1 hour, or generally it happens between that 8:30 to 9:15 time frame. Just you wait for that, then take a trade. You can make with the options, you can make with futures, you can make with stocks. Just one signal, you can use it in multiple different ways. Then you can take the trades. So let me go through some questions. So we have a setup session at 4 p.m. today. So there are different ways, right? You can subscribe. One is you can get the indicators. Then based on your risk and other levels, you can do the trades by yourself. Right? The strategy is simple. Every day when you see a sell signal, right? If you want SPX, right? SPX and XSP are the lowest risk trades because there is no cash settlement. The bid and ask are best. But let us say you are little more high risk trader. You want to trade Meta also. Then you can have the indicators, right? Because when we give the alert, we look at all different types of traders. So we may only give XSP or SPX trades. But if you have indicators for yourself and you are whenever you get a trade on SPX, you can go and see Meta. Then you see that Meta is also dropping, right? If you are a high risk trader and if it happens in the first 1.5 hour, even you can trade debit debit puts, right? Debit spreads, or you can take puts. So because generally first 1 2 hours the volume will be very high, there will be a huge momentum in the direction. So if you are little more risky trader, you want to take little more risk, you can, right, instead of taking credit spreads here, right, one way is you can do credit spreads. You can go little bit up and you can do credit spreads. So as long as stock stays below this zone, all that money collected is 100% yours. But if you are a high risk trader, you can do naked puts here. If you are a medium risk trader, you can do debit puts here, debit spread here. That means you are buying a 705 put and you are selling a 710 put or something. So, or you are a low risk trader. So it is if you have the indicators, it is up to you how right on which tickers you want to use the strategy, right? Based on your risk, because every trader has a different risk profile, different account size. So if you have indicators for yourself, you can use the whenever you see this signal on SPX, at the same time you go to Meta, you go to Amazon, or you go to Nvidia. Most of the time there will be a big drop on all the major stocks at that point of time. Or if SPX gives a buy signal, then at the same time most of these other big companies will also start moving up. So one way is you can join the options channel where we will provide you the signals, right? Whenever we see this SPX or right NDX, these type of trades, low risk trades, we will provide you. That is one way you can make the daily income. The second way is you can you can get the access to the indicators and then you can trade, right? Whether it is NQ or ES or SPX or Meta, Amazon, Tesla, whatever it is, you can trade, right? Because whenever SPX started dropping, Tesla also started dropping. We got a swing sell, then it came all the way down. Then we got a swing buy. Whenever you get a swing sell, you go and do bear calls. Whenever you get a swing buy, you can close the trade, you can open bear call spreads, right? Or bull put spreads. If you swing buy, go below, do the bull puts. If you get a swing sell, go above, do the bear call spreads. So if you have indicators access, then you can do whatever you want, whichever ticker you want. Or if you want low risk trades, then we'll provide you mainly for SPX, XSP. These are the low risk ones. Or NDX, we'll provide those tickers. So one way is getting the access to the alerts channel where we'll be taking the trades, where we'll tell you that, okay, you can also get the bear call spreads or bull put spreads based on the low risk trades. Or if you want to learn, you can join the live sessions. Whenever we take SPX bear call, you can go and do SPY bear calls. You can go and do QQQ bear calls. You can go and do NDX bear calls. You can go and do at the same time, right? Your YM, uh, your DIA also will move in the same direction generally. So you got a so there will be so many different tickers which moves in the same direction. So you can go and do the bear call spreads based on your account size or based on your risk appetite. So you have two ways, right? One is you can subscribe to options channel and you can make the daily payouts. 8 or 9 out of 10 times you will make money by taking just one trade. Or you are more right, you have less meetings, you can focus more and you want to take advantage with futures, stocks, options, currencies. Yeah, because the concept is same, right? Whether it is currencies, cryptos, India stocks, whatever it is, this it is the same concept. Whenever you see in the India time, right? India market opens in the evening. The first 1 hour you see a swing sell, or in the first 1 hour, once India market opens, you see a swing buy. You can do options, you can do nifty options, you can do nifty bull puts, nifty bear calls, like that. So the concept is same. If you have the indicators, you can do whatever you want. Otherwise, you can just get the alerts access and then you can follow the trades. So we take like an average trader and then we'll give you some low risk trades, sometimes some moderate risk trades. But if you have indicators for yourself, you can take trades based on you can learn and then you can take trades based on your time and your risk profile. So as I explained, if the signal comes in the first 1 hour, generally you can also do debit spreads. But if the same signal comes in last 1 hour, then instead of debit spread, credit spread is much more low risk. But if the first 1 hour, if you get a swing sell and scalping sell, even a debit spread or a naked put also will make huge profits because there will be a huge momentum in the first 1 hour. So yeah, that's it, everyone. So to answer your questions, so how to use? So one is you can get the access to the options channel where we provide you the alerts, the low risk trades. The second way is you can take access to the indicators and you can use, right. You can, instead of paying some $200 for options, 150 for stocks, 150 for crypto, by paying 350 for indicators, you can use for everything, right? So it is up to you based on whichever you want. So you can start with three indicators, and once you gain confidence, you can go with five indicators. But yeah, initially you can start with three indicators. For SP experts, you don't need to have a big account. As I mentioned earlier, if you are just taking this trade in the morning, the first 1 hour, you can just open it and you don't even need to close it. Then it won't count as a day trade. Yeah, you can also do credit spread and debit spread at the same time, right? For example, if you are a high risk trader, you see a swing sell, you go and do a credit spread, collect some premiums. So already you got some money in your account. Now you can use some of the premiums and do a debit spread. So you are using that money and buying right? You are buying some 601 put and you see there is a big buy zone here. That means price will not go below this. You buy 601 put and you sell 595 put or something. Then if price comes here, then instead of investing big amount on the puts, because you are buying a put, you are also selling a put. So your investment will become less. As long as it stays below 601 and above this one, then you make profits. So based on your risk, if you want to take a medium risk, you can do debit spreads. If you want to take a high risk, you can do naked puts. Yet all we do is wait for that swing sell or swing buy in the first 1 hour. That is the best opportunity. Yeah, when a swing sell or swing buy, right? Generally we track SPX. So yeah, whenever we see that signal, we'll post it in the options channel. But if you want to trade multiple tickers, we may not give each and every ticker, right? If I see it in Meta or Amazon or somewhere else, right, or Tesla, we may not give you each and every opportunity, right? Or we may not, because sometimes when you open too many trades, it will be difficult for you to close. So we may only watch SPX or ES or something, and then we provide you that, okay, this SPX opportunity or XSP opportunity. So even though you are, because for all the other ones, you have to close the trade before end of the day. Otherwise, there is a risk of stock assignment. Whereas with XSP, SPX and XSP or NDX, you don't have any such risk. You don't even need to close the trade. So that's why we try to give you mainly SPX or XSP trades. With SPY and QQQ, also there is a risk of assignment. With only SPX, XSP, and DX, you don't have that risk of stock assignment. So we try to provide you those opportunities. But if you have indicators, you can use the same, right? Whenever you see that signal, immediately you can go to other symbols. No, you see that, oh, Amazon is dropping or Apple is dropping or Tesla, you got a swing sell. Generally, right? Whenever SPX or ES gives a swing sell, most of the high volume stocks like Microsoft or Meta or Amazon or Tesla, they may also give the swing sell at the same time. Or if SPX or ES gives a buy signal, most of the time these big companies will give buy signal. So that is the time where you can enter multiple tickers if you have a big account or high risk profile. If you are a more busy professional, you don't want to take a lot of risk, just every day make 200, $300. Just take one trade. That's it. You don't even need to close the trade with SPX. If we get a swing sell, then do a SPX bear call. If we get a swing buy, do a bull put. So that too, if that happens within the first half an hour, 45 minutes, that is the best opportunity which you can use for stocks, options, futures, everything. If it happens later, then better you focus only, right? Better you take profits. Whenever it moves up, you book the profits. Otherwise, it may go up, come down, go up. It will be little volatile in the, but the first trade which we get, generally there will be a huge one-way direction, one-side direction. So this signal you can also use for debit spreads. You can also use for naked calls, naked puts. If we get a swing sell, you can do naked puts or you can do debit spreads. If we get a swing buy in the first half an hour, 1 hour, you can do naked calls or debit spreads. But if you don't want to close the trade throughout the day, just you open a credit spread. Then you don't even need to close the trade. That's it, everyone. So again, the strategy is working very good, right? Unless there is any major news event on the day, we can follow the strategy every day, make few $100 with a low risk, low investment, low time, right? You don't need to spend a lot of time watching the charts or waiting for a signal. You can just open a trade and you can let it run. You don't even need to look at the charts again throughout the day. So that is the main, right? Because for most of the other tickers, you have to enter and exit on time for options. For stocks, it is okay. Even if you don't exit on time, it is okay. But for options, because these move so quickly, if you don't close on time, it will be a problem. But with this strategy, daily income strategy, whenever we see this swing buy or swing sell, you do bear calls or you do bull puts, and then you can let the trade expire with it without spending a lot of time. Right, as I said, SPX generally it will be within the first half an hour to 45 minutes. Yeah, when you do swing trades, you don't even need to expire. Yeah, you don't need to close those trades. TradingView is the number one platform. No, if account is less than 25K also, you can do as long as, right, you are not closing the trade, you can do it. Right? Only if you, because you have PDT rules. But if you are opening a bear call and you are not closing, then it won't count as a day trade. So you can do it, right? Every day you can take a trade. You can take one SPX trade, one XSP trade, one NDX trade, and you can get them expired. Yeah, you can do SPX in yeah, you can do SPX in Robinhood also, but you have to use Robinhood app instead of web interface. With a 30K account, you can do three SPX contracts, 6 to 7 XSP, and 2 to 3 NDX. Yeah, that is fine. The trading volume increases in the last 1 hour because there will be a lot of closing, right? Everybody tries to take the profits. So all the profit booking will happen in the last 1 hour. So whatever they open, right? The big companies, if there are a lot of different stocks or other things, generally there will be a lot of, right? Again, big companies will not manually do the trading. They use all their robos. They will use their right all the AI software to do the trades. So that's why generally last 1 hour we will have a huge volume. In the first 2 hours, right, 8:30 to 10:30 Central, and again 2 p.m. to 3 p.m. Central is where there will be big volume because their softwares are scheduled to run during that time. Suddenly you see, right, every day, last 10-15 minutes, you will see a big move up with SPX. If it is going down, suddenly last 15 minutes they will take it up. Or if it is going up, they will take it down in the last 10-15 minutes. So that is how their softwares are scheduled to execute. So that's why generally you see some big volumes in the last 1 hour. But yeah, if you use this single strategy, right, always whenever you open, you will see a range, and we'll wait for a swing sell, scalping sell. You do a bear call, or if you see a swing buy, scalping buy, we do a bull put. So SPX and XSP are the best two tickets to do these trades. And whenever it happens, you can also take trades in the prop firms until your T5. So this line is T5 line. Until that line is red, you can continue to hold. Whenever that becomes green, you can close, and you don't need to take any more trades on the day. So in the evening time, where volume will be less, it will be a lot of chopping. But whenever you get that trade in the morning, that will be the best opportunity. So, so if you take 2 or 3 trades, your maximum risk is $1,000. So you are doing a bear call here. You are collecting $150. So your risk is 1,000. If you make, you will make $400 to $500 every day. So you can watch the live recordings. So if you go and so all the sessions are recorded live. So all the live sessions you can watch Friday or Thursday or Wednesday. You can watch every day recording. You will understand how the strategy is working good. Right? All we do, right? Especially this particular trade, which happens in the first half an hour to 45 minutes, that is the best trade for the day. If we just follow and avoid the other trades, then your risk is minimal. So if you go to YouTube channel, search on Right Choice Advisors, you will see all the live recordings of every day. You can see how the strategy is working good. So once you gain the confidence, either you can be part of, you can get access to options channel, or you can get access to indicators. And then all you need to do is follow this. One is you can make money with options, you can make money with stocks, you can make money with futures, you can make it in individual accounts, you can do options on futures, you can do in personal accounts, you can do in prop firms, whichever you want, you can do it. So yeah, you can watch the right. It's not just one day. We have recordings of each and every day, and you can, yeah, once you gain the confidence, you can be part of it. XSP is nothing but SPX. The only thing is you have to divide by 10. That's it. Yeah, I'll share the recording in some time. So again, just as a summary, right? You wait for one signal in the first half an hour to 45 minutes. Between 8:45 to 9:30, first 10-15 minutes we'll avoid trading because there will be a lot of up and downs. Between 8:45 a.m. Central to 9:30 a.m. Central, you watch for a swing sell, scalping sell, or a swing buy and scalping buy. Whenever you get that, we can trade. If we get a swing sell and scalping sell, we do bear calls. If we get swing buy and scalping buy, we do bull puts. At the same time, when you get it on SPX, you can do XSP, you can do NDX, where you don't have any problem with the assignment of stocks. That means it is completely cash settlement. That means you don't even need to close. You don't need to worry that suddenly if you don't close, they may assign the stocks. So SPX, XSP, the best two tickers. The next one is NDX. If you are active traders, you can also trade SPY, QQQ, Meta, Nvidia, Amazon, Tesla at the same time. Only thing is you have to close those trades whenever it comes all the way to the bottom. You have to close those trades, right? But for SPX, XSP, NDX, you don't even need to close the trades. That is the major advantage with those tickers. Yeah, that's it, everyone. So today at 4 p.m. we have a setup session. If anybody want to get the indicators, so for options you can go to in Telegram. You can go to options underscore PREM underscore BOT. If you want indicators, you can go to ninja underscore apex underscore bot. Yeah, if you get a swing buy or swing sell on ES or SPX, you can take the trades. Right? Whatever is the current price, you go 5 points up above that price. If you get a swing sell on ES, because ES and SPX are same, you have to just go 5 points above from that. If it is a swing sell, if it is a swing buy, you have to go 5 points below. Uh, so already I did some videos. I will share, right? Once you become members, I will share videos on how to take the spreads, because now market is closed. Otherwise, tomorrow in the live session, I will show that. How many trades we can risk in the morning trade? How many contracts? As I said, always divide your account size by 20. If you have a 30K account, if you have a 30K account, you can take up to 3 contracts for SPX. If you have a 10K account, you take 1 contract. 5K, 10K, you can take 1 contract. If you have 30K, you take 3 contracts. You can generate every day $300 to $400. So again, 90% of the time, the price will stay above this zone or below this zone or above this zone. So in case of any major good news, if it starts moving up, you can take a stop loss, right? For example, you collected $150. Let us say now the premium became $300. You can take a loss, take a stop loss, but 8 to 9 out of 10 times the price will be below this, or price will be above the buy zone, price will be below the sell zone. Only if there is sudden news or something, or if there is a major event on the day, that is where we have a risk. Either you don't trade on the day, or if you take a trade also, you have a stop loss if price go 10 points above that, right? For example, if we took 22 160, 22 170 bear call, and price started going up above that level, then you can take a stop loss. That's why we use the position size. So the three best indicators are futures level manager, then you have T5 and price pulse. They are the top three indicators. If you want 5 indicators, then stocks level manager, crypto level manager, they will help you. You got a swing cell here. Yeah, yeah. So let me share the bots one more time. Options underscore PREM underscore bot. If you want just the alerts, or if you want to get the indicator so that you can trade based on whatever you want, then you can use ninja underscore apex underscore bot. Yeah, that's it, everyone. We'll talk again during the setup session. Have a nice rest of the day, everyone.